Hello, welcome to IG's Trading the Markets. There's only one number in town this week, which is going to change things across the investment landscape, and it's that non-farm payrolls number out on Friday. Ahead of that, joining me now all the way from the US is none other than Chris Versace, CIO of Tematica Research. Now, it's such a big number. Everyone's watching this because, bad news is good news is bad news. We're in that space right now. But also, there are so many bits to this number, this May figure. Which is the most important?
You know, leading up to the all-important May employment report, as you've said, we've gotten indications of slower hiring, whether that's from the array of PMI reports that we've gotten, the Challenger Cuts report, or even the ADP employment report. So I would first position the report as one that we very well could see a downside surprise in the number of jobs being added during the month. But here's the thing, Angeline, the figure that I think the market is really going to have to focus in on is year over year wage growth. And I say that because if we peer into some of those PMI reports, particularly the one from S&P Global, it called out that companies are not replacing workers who have exited because of wage pressures that they're seeing. And I think if we get a hotter than expected wage print in tomorrow's employment report, it's going to remind folks that inflation remains in play, that it's not backing down as a lot of people are kind of hoping it will. As it is in some of the other data we got this week, there are reasons to think that inflation, hasn't really budged much in the month of May, and we're likely to see that with the employment report and the CPI report. But again, if the market has a bit of a wake-up call tomorrow, we could see some of the gains that we've gotten over the last couple of days be given back.
And certainly, we've seen a lot of economic data out of the US signaling a softening. Do you think there is a risk that the Fed might hold off for too long and not cut rates, and we have the US economy, tipping into perhaps slower growth?
Well, there's a difference between, growing a little more slowly and then falling off a cliff. And, if we look at the data that we got, so far this week for the month of May and kind of update it with what we saw for April, it kind of says that the US economy is continuing to grow at a healthy clip, that jobs are being added, but inflation remains, a thorn. And I think the Fed is going to continue to watch the data, just like a lot of us are doing, and updating its expectations. I do think, and I'm sure we'll talk about this more next week, but that's going to have everybody really watching the Fed's latest set of economic projections that they'll publish next week alongside their next monetary policy decision.
At the same time, this comes amid a backdrop of Nvidia still rising, its shares seeming to defy gravity, and it's dethroned Apple now as the number two company in terms of market cap. We've been speaking to everyone from traders to institutional investors to fund managers here, and there seems to be this sense that what, if Nvidia is doing okay, then the markets will do okay. Is this what you're getting across the pond as well?
Well, I think if we look at what we saw yesterday, with the S&P 500 hitting a new high, up 12.25% year to date, the Nasdaq up even more, and then we compare that against the S&P 500 equal weight, that's up a little over 4%. It's kind of hard to argue that companies like Nvidia aren't really driving the stock market. And I understand that there's a lot of enthusiasm around the upcoming 10-for-1 stock split. The argument being that, it'll remove some of the sticker shock from Nvidia's current share price, allow folks to get in who have kind of missed out. I would argue it's really kind of more of a cosmetic effect. We don't buy individual shares. We tend to build a position out. So whether or not it's the number of shares that are changing and the share price that's changing, net at the end of the day, your position size is still going to be the same. So I wouldn't be surprised if we see enthusiasm going into this and then perhaps, just fade a little bit. But make no mistake, Angeline, when we look at NVIDIA's position in AI and data center and the prospects for both, it still remains extremely well positioned, which is why it's one of the larger positions that we have in the Street Pro portfolio.
And finally, we're coming to the end of the US retail earnings season as well. Quite a mixed picture out there. You know, Walmart doing quite well, but at the same time, there are signs of cracks even on the lower end of the market. You mentioned Costco in one of your reports. What's the deal there, given it's had a few target price upgrades earlier in this session, in this coming session?
So, we've been a big fan of Costco, both as a consumer as an investor. It's really one of those things that helps consumers, stretch their disposable dollars. So, to the extent that we're seeing consumers being increasingly choosy, they're opting to, spend their dollars more at Costco. They have really leaned into, fresh foods over the last several years, and I think that's really where consumers are still feeling a lot of the pinch of inflation. But remember, too, the secret sauce for Costco is that it's really a membership revenue story. As they grow their warehouse footprint, they get more members, they drive this very high, and recurring membership revenue that counts for a significant part of its bottom line. But the proof in all this is last night's May sales report, simply stellar. Costco's, I believe their comp sales were 6.5%. If you take out currency and gas prices, up about 6.4%, clearly continuing to take consumer wallet share at the expense of other retailers out there. I continue to like the story.
I have to say, I'm really, really curious because there are Costco's here, but we don't have that hot dog served up everywhere. I think there's only
That's
one branch that has it.
I get it every time I go. It's the best deal you can get. It's $1.50 for a hot dog and a soda.
Next time we'll have to try that. All right. Thanks so much, Chris Versace there, CIO of Tematica Research, talking NVIDIA, talking Costco, and of course that NFP number. This is IG's Trading the Markets.